Investors frequently follow Warren Buffett's lead because of his outstanding track record. Fortunately, this is rather simple to do because Berkshire Hathaway must submit Form 13F to the Securities and Exchange Commission every quarter. Warren Buffett, CEO of Berkshire Hathaway, BRKA -0.35%, BRK.A -0.35%, BRK.B -0.65%, is one of the most successful investors in history. The Oracle of Omaha, as Buffett is now known, has generated an average annual return of 20.1% for his company's Class A shares during the past 57 years, or BRK.A. Overall, we're talking about a gain of more than 3,600,000%, which contrasts with the S&P 500's 30,209% increase during the same time period, including dividends paid. Investors may examine what the best minds on Wall Street were buying, selling, and holding in the most recent quarter by looking at a 13F, which is essentially a portfolio snapshot. 13F by Berkshire Hathaway does not, however, provide a complete picture. New England Asset Management is a specialty investment firm owned by Buffett's company as a result of the 1998 acquisition of reinsurance giant General Re, or NEAM. Although Buffett is not active in NEAM's investment portfolio, Buffett's company eventually owns the security NEAM purchases. 87% of Warren Buffett's more than $5.9 billion secret portfolio was invested in only 5 stocks at the end of the quarter that ended in June. Apple, 47.24% of invested assets. It may come as no surprise that Apple, or AAPL 1.57%, the market leader in technology, is New England Asset Management's largest investment by invested assets. Berkshire Hathaway is the company that owns the majority of Apple. As of June 30, 2022, Apple accounted for about $2.8 billion of NEAM's $5.92 billion in assets under management. Why has Apple been such a fantastic investment for so long? Both its capital return scheme and innovation. According to Cantor Brand's research, innovation has helped Apple become the most valuable brand in the world. A devoted client base has been spurred by the iPhone's ongoing innovation, which has also pushed sales and profits to all-time highs. However, marketing subscription services will be the main focus of Apple's future. This multi-year change, which will see Apple become more of a platform firm, is being led by CEO Tim Cook. Over time, doing so should increase its operating margins and lessen the erratic sales patterns frequently brought on by product replacement cycles. Regarding capital gains, Apple pays out one of the greatest nominal dividends on the planet and has repurchased $520 billion worth of its own common stock since the year 2013. To put it another way, there is a very compelling reason why Apple is the largest publicly traded corporation in the United States based on market cap. U.S. Bancorp, 13.76% of invested assets. Bank stocks are a favorite of Warren Buffett's, and it appears that the investment team in charge of managing his secret portfolio feels the same way. At the end of June, Regional Bank US Bancorp, or USB -2.51%, the parent company of the more well-known US bank, represented over 13.8% of invested assets and has been in a consistent position in NEAM's portfolio for more than 20 years. Financial discipline is the cornerstone of US Bancorp's steadfast operating performance. Prior to the Great Recession, the majority of its competitors were investing in riskier derivatives, but US Bancorp has largely committed to what I call the bread and butter of banking, expanding its loans and deposits. While this may not result in astounding increases in sales and profits, it does guarantee some of the largest banks' highest returns on assets. US Bancorp has also done a fantastic job of enticing its client to bank online or through mobile apps. By May 31, 82% of its active customers were using digital banking, and 64% of all loan sales were made through websites or mobile apps. The latter has increased from only 45% at the start of 2020. For banks, digital transactions are significantly less expensive than exchanges over the phone or in person. As a result of combining several of its physical branches, US Bancorp has been able to reduce its non-interest expenses. Bank of America, 11.96% of invested assets. Bank of America, or BAC, negative 1.50%, is yet another big investment of Berkshire Hathaway that also accounts for a sizable portion of Warren Buffett's secret portfolio. NEAM owns around 22.8 million B of A shares in its portfolio, whereas Berkshire Hathaway has close to 1 billion. Simply put, time is what makes money-centered juggernaut like Bank of America such a desirable investment. Although recessions are a necessary component of the economic cycle, expansionary periods continue a lot longer. A business like BOFA can grow its loan portfolio and net interest income by being patient and letting the US economy expand gradually. Bank of America's sensitivity to interest rates is another factor that makes it seem like it's a great investment. Bank of America will collect billions of dollars in more net interest income on its outstanding variable rate loans without having to lift a finger as the Federal Reserve is forced to rapidly hike interest rates to control historically high inflation. Also, don't ignore the possibility of capital gains from bank stocks. It's not unusual for a huge company like B of A to return more than $25 billion yearly to shareholders through dividends and share buybacks when the US economy is booming. HP, 9.12% of invested asset. A great value stock is a favorite in Warren Buffett's hidden portfolio. At a price of fewer than 7 times Wall Street's forward-year anticipated earnings, HP, or HPQ negative 1.85%, a provider of personal computing and printing solutions, offers exactly what NEAM is looking for. There are just 3 catalysts that may be used to explain why HP. First, even in times of economic distress, sales of PC and printing solutions have a tendency to be very predictable. This industry is established and generates a lot of cash flow. Wall Street appreciates companies that are reliable. Second, the investment team at New England Asset Management is probably just as impressed with HP's capital return program as Warren Buffett is. The corporation aggressively repurchases its common stock and increased its base annual payment by 29% in 2021. A declining outstanding share count can increase earnings per share and make a company appear more fundamentally appealing to investors for businesses with stable or increasing net income. Thirdly, HP shares likely have a safe floor built in at less than 7 times projected earnings for the following year. There are probably not many additional downside risks for the company, even if there are a few near-term catalysts for positive growth. Chevron, 5.26% of invested asset. Chevron, or CVX negative 0.40%, an oil company, rounds out the top 5 positions in Warren Buffett's covered portfolio. The 2 biggest purchases made by New England Asset Management in the second quarter were HP and Chevron. Chevron's integrated structure is one of the factors contributing to its success as an energy stock. Chevron owns assets in the midstream or transmission pipelines and downstream chemical plants and refineries, even though its upstream drilling operations produce the company's most lucrative operating margins. The majority of midstream assets rely on volume or fixed fee-based contracts, which generate extremely predictable cash flow. As the price of crude oil declines, chemical plants and refineries profit from decreased input costs. In other words, Chevron is protected from changes in oil and natural gas prices. The 2 years after that, nevertheless, look promising for oil stocks. Global energy giants have purposefully reduced their capital spending in response to the COVID-19 outbreak. This, together with Russia's invasion of Ukraine, demonstrate that raising global oil production will be a difficult and drawn-out task. That's good news for drilling businesses that anticipate sustained crude oil prices increase. To stick with the list's theme, Giant oil firms like Chevron are renowned for having generous capital return policies. Chevron has promised to repurchase up to $10 billion worth of its common stock this year in response to historically high oil and natural gas prices, and it also distributes one of the highest nominal dividends. Chevron has the flexibility to reward its long-term investors, thanks to having what is perhaps the finest balance sheet among integrated oil majors. Should you invest $1,000 in Apple Incorporated right now? Before you consider Apple Incorporated, you'll want to hear this. The 10 equities that their award-winning research team thinks investors should buy right away have just been disclosed. Apple Incorporated was not among them. Their 20-year-old Motley Fool stock advisor online investing service has outperformed the stock market by 3 times. They believe that there are 10 equities that are better buying right now. From our discussion, what have you learned? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video. Bye!